European markets are set for a higher open on Friday as global attention turns to US Federal Reserve Chairman Jerome Powell's speech at Jackson Hole Economic Symposium later today. Many analysts expect the chairman to adopt a hawkish tone and reiterate the Fed's commitment to dragging inflation back toward target. Meanwhile, the ECB's July meeting minutes were released, and they show that policymakers are increasingly concerned that inflation is getting entrenched, even as the risk of a recession is looming in the bloc. The minutes also show that further rate hikes of 25 or 50 basis points may be on the agenda. For more on this now, let's go to David Madden, who is Equiti Capital market analyst in London. David, many thanks for joining us today. First of all, what do you expect from the next September meeting of the ECB? Because we know that growth concerns are mounting, but experts are also warning at this point inflation in Europe might hit double digits next year. What is top of mind for policymakers in Europe at this point?
I think the fact that CPI in the Eurozone is at 8.9%, it's record high, it's showing no signs of slowing down. I think even though the possibility of a recession or at the very least an economic cool down in the currency bloc is a very real possibility, I think the ECB are going to press ahead with another 50 basis points hike. If you look around the world and what other central banks are doing, they all seem to be moving in unison. They all seem to be very keen to tackle high levels of inflation. Here in the UK, the Bank of England have hiked interest rates 6 times since December last year. And the most recent hike was a hike of 50 basis points. Over in the US, we've seen 4 interest rate hikes this year alone. The last 2 rate hikes have been hikes of 75 basis points each. There's a possibility the Fed might do another 75 basis point hike next month. As you mentioned in your intro, Jerome Powell's speech at Jackson Hole today is going to be in focus, and traders will be trying to figure out what size of a rate hike will the Fed deliver next month. So when everyone else is hiking by fairly large amounts, that sort of gives the European Central Bank cover to actually do a large rate hike themselves. Now, there is concern that the Eurozone might enter a recession. Gas prices are high. The most recent manufacturing and services figures in the Eurozone are disappointing. But for the time being, I think they're going to be more fixated on bringing down the cost of living than they are in terms of economic activity.
Interesting. David, is this divergence of monetary policies that you've hinted at between the Fed and the ECB having any impact on the euro depreciations that we are observing? Because the euro is trading at 2-decade low against the dollar. First of all, can you explain to us what's the mechanism behind that? And also, could it slide much further? Firstly,
in relation to why did the euro fall to a 20-year low? Well, it was a mixture of a weak euro and a strong US dollar. As I mentioned, economic activity, manufacturing and services in the Eurozone, the most recent figures were very disappointing. They're concerned that the Eurozone is either going to slow down or enter a recession. Wholesale gas prices this week in mainland Europe settled at their record high, so there are major concerns over energy. There are also fears about will Europe have enough energy to survive through the winter at regular capacity. Those fears are all hanging over the euro. Turning attention to the US dollar, well, as I mentioned, we've had multiple interest rate hikes from the Federal Reserve in 2022. It seems as if more large rate hikes are in the pipeline, and the prospect of further rate hikes from the Federal Reserve is pushing up the US dollar. And it's not just purely about interest rate hikes, it's also to do with your willingness and your ability to do it. The Federal Reserve have made it very clear that they're willing to tackle inflation, whereas the European Central Bank have taken a less aggressive stance in relation to their language. In addition to that, the most recent initiative, the TPI, the Transmission Protection Instrument, is essentially a tool that will try and that will stop government bond yields from spiraling from ratcheting up too high and potentially triggering a Eurozone debt crisis part 2. And with that, traders take the view the ECB can't be as aggressive as they might want to be, or can't be as aggressive as, say, for example, the Federal Reserve. And that's why we're seeing this aggressive move to the downside in euro-dollar. And given the way things are going, gas prices in continental Europe, the perception of what the Fed are going to do in the months down the line, we could easily see the euro-dollar print new 20-year lows in the weeks and months ahead.
Interesting. David Madden, many thanks for this update.